And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the NQ for Tuesday, May 4th, 2021. What a beautiful day. When the plan comes to fruition and the market obliges by following what the Elliott wave patterns were telling us. And the only downside, if there was any today, was that it overshot Fibonacci. And that's okay because we continue to trade what's in front of us. And even though it shot past the bottom side of that target, which was at 13,440, it actually got below 13,400 for a brief period before recovering into today's close. A nice recovery it was, I will say. Now, let's just take a quick review of what did happen today. The market really basically started in Globex to just nosedive, and it really picked up steam today. They did attempt right off the gate to try to buy into it, but that did not work at all. And the market immediately slid below that first level that we had. Well, in fact, let me just say it had reached that 13,699, which is the updated level that was at 13,707. And then we had the previous low of wave A at 13,700.50. And it slid right through those and basically got through this updated level at 13,699, which kind of represented that 700 level, and kept going. Now, I had to give credence to the fact that I thought during the day, that may be it. Maybe we are now finished with wave 3, we're going to bounce and then we come back down. But nope, I was wrong. The selling did get pretty intense this morning in terms of it was just down, down, down. And again, I'm going to interrupt just discussing the Fibonacci and the Elliott wave to say that on the near-term charts, so in other words, my 1 minute, my 2 minute, my 5 minute chart, all of the moving averages were in alignment on those three charts, which spells we're going in the direction it's pointing, and that direction was down, and it sure followed suit, which made entry and exit extremely easy, and therefore made trading so profitable because we might as well ride as far as we can. If the sellers are coming in and they want to dump out, you just short, ride it down. And then, you know, if they rally, you're just going to start shorting points where it's going to turn again. And it was beautiful. And that whole scenario, that whole strategy worked beautifully. And I'll go back to the Fibonacci, but I want to emphasize that that's why we use the moving averages, because when they are in alignment, it is telling us a major factor about what that market is going to do. And if they're in alignment to go up, it's going to go up. And you'll find that the buyers come in and then they come back in and then they come back in. So it's done in waves. Same thing on the downside. It was an alignment. And so it was just wave after wave of selling. And that just suggests, even though they were, you know, there were little breaks in between and the market would rally back up, but it was just an add opportunity. It was a get back in opportunity. And that proved to be the case until the market turned at about 8 o'clock East Pacific, 11 o'clock Eastern. And then we started to, you know, pull up in a recovery or in a bounce. Okay, so it slid through 1.618, 1.70.5, you know, it slid through all of that and eventually came down to 13,381, we'll call it, before it started to recover. And it spent a lot of time down below 13,400, you know, trying to figure out what it needed to do. Now, what I have put on our charts is that this completed the minute wave 3 down, is my estimation. And that would be within this minor wave 4 correction, and actually it's the minute wave C down. So this is a sub minute third wave. Still the same power. Remember, as I was talking about yesterday, it's like when this thing gets going, it is going to accelerate. That's exactly what it did, which gives us just stronger evidence that it is the third of whatever that little bit larger count is, but it is a third wave. This is total 100% characteristic of what a third wave can do in either direction. It's the power of the wave itself. It's a point of recognition. It's a point of a lot of areas that assist in accelerating the move. And that's what happened. Now, so I put a 3 down here. I put a 4 here, and we may take out this high before all is said and done, before reversing back again. But the way that I've run our Fibonacci calculations right now is I wanted to, if this is indeed wave 4, and it did finish at the closing high at 13,553, we'll call it, then I'm expecting a 5th wave down. So I wanted to put together some Fibonacci as to, well, where could this thing go? So first I redid the estimates for the entire C wave and made an adjustment and made it a little bit cleaner in terms of I got it closer to that high at 64 and the low at 13,000, come on, 13,700.50. And by doing that, I added also, because since it blew through what I had included in terms of levels, 1.705, then I added 200%, which is just doubling of the 100%, and then I added 2.382, so 238.2%, and that would be of the A wave. So again, we're talking about the C wave as its relationship to that A wave. Now, then I added an additional extension, and I took because 5th waves are related to 3rd waves first off, and then 1st waves. So the common is, so then I ran our the Fibonacci extensions from the top of where wave 3 started to where I feel it's concluded down here at the low, and then ran it up to the existing high for what I'm counting as wave 4. And lo and behold, we had a match. So initially, the 382 level, so in other words, the 382 level of wave 5 comes in at 13,335, we'll call it 336. And then that 200% of wave A comes in at the exact same level. Now that gives us some strength that this additional drop should find support and likely complete here. If it continues down, we have additional support at 13,270, we'll call it 269, 270. And then we have 618 at 13,202. But then just below that, folks, we have the 2.382 of wave A, comes in at 13,195, we're going to call it. So this becomes a very strong zone to, number one, contain additional selling, which I still expect, but also complete this minor wave 4 and set the stage for a recovery that should knock the socks off everybody, because A, they're going to be caught short, B, they're all going to be flocking to try to get back into positions to go long, et cetera, et cetera. So it should be a really dynamic liftoff of that level, if indeed that's where it's going to complete. So what are we looking for tomorrow? We may get additional rally. And it would not be uncommon for it to come back up to this area, 13,612, 613. I don't anticipate that it should go too much further, but it would have to go up pretty far for what, because the rule is that wave 4 cannot overlap wave 1. Well, wave 1's way the heck up here, but I certainly would not want it to go back and take most of the wave 3 decline. Then to me, it's not a 4. Fourth waves can be a little bit larger, but not that big, not that big. So because this wave was big enough on its own, it's already climbed over $100 higher. In fact, it was 100, and at that level, it was about 170 points off of the low. And it was pretty dynamic. That recovery back up, I mean, the buyers just stepped in and they bought and they bought and they bought. Now, whether that was, pre-scheduled buying by hedge funds and portfolio managers, which it's that time of the month, we're getting into the 4th and the 5th of the month, and that's when a lot of the outside hedge fund money, portfolio managers are coming in and placing that money. This is when it comes in. 401k money, IRA money, this is when it gets paid into the account, and then they have to invest it in the market. So we may see the market is going to put the end of that C wave here. That could be possible. Ultimately, I'd like to get a slight new low. That would put a very clean cap on the Elliott wave count. If not, I'll open it up and I'll take a deeper look into it. And still, the market is telling us what it's going to do. So if it just continues to really blast higher, then I will have to open up this wave and see if the count fits for it to be completing here. Obviously, it reached past Fibonacci levels that we believed would contain it. So anything down here could be the end point. And I actually do believe that we've got another little round of selling to come in before we get that big push of new money coming into the market. And so we might get this first off in the morning, and then as the fund managers move in with their money, that could come in as buyers, and the first thing would be the sells, and then it switches, and then we get buys, and then it's off to the races. So we can possibly get an extension of this 4th wave, and that'll come up. I'm going to say right now that I think that 13,613, 15, around in there should cap it. We've got the 20-day moving average here at 597. So that is going to help us contain. And below that, our shorter terms, the 4 and the 8, are kind of hooking higher, but that can change in a heartbeat because of the nature of how short term they are. Downside, I would continue to think that these levels may provide support. They sort of did during the day today, but when it came time to break through them, there was like, okay, that's all gone, no more support, and boom, they just went. Or they'll just go through it. And that being the case, what we may see is some support at 34.17, which is coordinating between the 3 and the 5. So that would be one level that may provide a pause. Ultimately, I'm looking for a new low below 13,380.75. Doesn't have to be great. And this is about 40 points lower than that low, and that would fit beautifully. We've got a double Fibonacci relationship there, and then another double Fibonacci relationship here should that selling get heavy again. So the intensity of the selling that early and that intense in those first hour and a half, about 2 hours of market activity this morning, did kind of go like, whoa, they mean business. So I kind of was almost anticipating a small bounce, but then they might come back at the close. I thought that the last hour that they might just slam it back and then we'd be all done. That didn't happen. No problem. We will wait and see what tomorrow brings. Again, trade what is in front of you. Trade your moving averages. They are the greatest tool to assist you in direction, in strength, in speed, and where entry and exit levels can be. So, and I mean exit. So, say you enter and you're entering as it touches the 4, but then it comes down and it breaks the 8 and heads for the 20. You don't want to hold that position. So it's helping you with exit and entry. Or if you enter as it breaks above the 4 or holds the 4, and you can target, again, if that's moving up, you can target the 20. That's where you're thinking, or you can target resistance levels from Fibonacci. So these tools help you in your day trading, and they're very important. And once I get the trade room started, folks, we will have some experts who will be able to detail working with moving averages, and we'll be able to do it live as we're trading. More on that coming. But the intent is to restart a trade room using all of these tools on a daily basis. Okay, I'm going to leave it all there. And the next update will be on Wednesday, May 5th.